Hi, this is Akmir with the US Chartbreakers for Tuesday, the 11th of April, and obviously a lot of people still trying to be bearish on US equities, given the interest rate outlook or alleged interest rate outlook, etc., etc. But it seems that perhaps too many people are believing the negativity, and that's the reason why we've squeezed up from the March support area around 38.30. Unfilled gap to the upside at the end of March, and we built on that. Never even needed to test the top of that gap, which tends to be a very bullish signal. This looks like a mid-move consolidation ahead of a new leg to the upside. 4180 to 4200, the target, which would basically take out the February resistance zone. That's the first port of call above that, and then we're looking for 4350, which is the resistance line projection from back in September. Only sustained price action back below the rising 50-day line would really give us the scare that we might have to test the 200-day moving average again. But after that bear trap in March, I don't think, or it does not look as though we'll need to test the downside again, apart from maybe the 50-day line. Moving on to the stocks, and the first one is Advanced Micro Devices, which has had a great start to the year. 3 unfilled gaps to the upside, and trending higher with the 50-day and 200-day moving averages now. Initial target here, the top of that channel from September, as high as $106. After that, looking for maybe a 2 to 3 month target up towards that June resistance line projection, heading up to $130. But even if you're cautious here, you'd be looking for a pushback towards the $100 plus area, even especially while we're above the old resistance from the start of the year, around the $88 mark. But with those gaps to the upside, I think we can possibly stretch the upside rather more than maybe most are doing at the moment. On to AMC, which has come up with a nice little setup for us. The setup is a bear trap island reversal, so we gap down to new lows and then gap up after that. So that's like a cork in water turnaround. We closed the gap at the end of last week as well, in fact, the beginning of this week. At the top of the gap there at $5, above $5. Looking for the shares to at least head up towards the 200-day moving average around $7.20, and eventually maybe by the end of next month as high as $9. So that really, that island reversal bear trap really could be a decent setup on AMC. Next up is a stock which has been looked at a few days ago. BigBear AI, loving the AI phenomenon at the moment. Great sort of hype in that area, which is not always a good thing. But here we've had a rebound off the 200-day moving average around the $2 mark. Above that, we're looking for a break of the 50-day moving average and recent resistance to take us up to the initial March resistance around $3.80. I think that would be a conservative and a reasonable thing to target. Obviously, the big picture target here, perhaps as high as $6.70 to retest February resistance, but maybe that'll take a little bit of work. Moving along to another stock which was covered recently and has so far covered itself in glory. Here we've got Elox Pharmaceuticals. We were looking for the top of that broadening triangle from back in December around the $8 mark. We've managed to push that or blow that out of the water. Next target here is another parallel resistance line to that particular feature. So a resistance line projection from back in the end of October. So above $8, looking for as high as $11.50 by the end of next month, and perhaps even sooner. Stock which is on the front foot as well at the moment is one which is new to the US Chartbreakers. It's EOS Energy Enterprises, and here we had a gap higher to start the week. We're in a rising trend channel that we've been in since basically this time last year. Top of that channel heading towards the $4.70 mark, and we're looking for that by the end of next month, while we hold above recent resistance around the $2.75 area. So above that, looking for a decent upside by the end of next month, $4.50, etc. On to another mover and shaker at the moment, probably one of the, I think, the biggest riser of yesterday. Here we've got GlucoTrack, and the interest here is that looks like we're in a broadening triangle. That broadening triangle been in place since the beginning of last year. the resistance line projection there from back in what's basically in February last year, heading towards as high as $5.70. And we're looking for that the longer we stay above the resistance on the way down, which was around the $3 mark. So above $3, looking for as high as $5.50 plus, maybe by the end of next month. Might need a bit of a consolidation, but with that bullish divergence that we had before the move, there should be decent momentum for the shares. Moving along to another contender, and here we're looking at a stock which is, again, new to the US Chartbreakers, at least for the near term. Here you can see that Guard Force has been gapping up or pushing up over the last few sessions. The real move here, the gap through the 200-day moving average, above that at around the $10 level. We're looking for a retest, quite logically, of February resistance towards $24, and hopefully we'll see that by the end of this month. If you're looking for a stop loss, probably $12 or $13, in fact, would be the easiest place, given yesterday's closing price action, or actually Friday's, the end of week closing price action for the shares. Moving along to another hot situation, hot for now anyway, professional diversity. Here we covered the shares before, and the highlight here was really the break back above the 50-day moving average and then closing above the gap down that we had back in March. That was basically around the $5 level. Above $5, we're looking for the top of that rising trend channel from the beginning of the year, and that's currently pointing at the $8.20 level, which could be seen as soon as the end of this month. Interesting that the 50-day line is now curling up as well. So both the 50 and 200-day lines rising in unison, which probably suggests that we can take out the initial 2023 resistance. On to Micron next, where the situation looks decent after the island reversal off the 200-day moving average. So we gapped down, but we gapped up, then gapped down, then gapped up again. So island reversal there, and above the at least the 50-day moving average, around $59. We're looking for the top of that rising trend channel from last year, and that's pointing to a target at $72, perhaps as soon as the end of this month. But we'd like to see $59 hold. We already had the unfilled gap to the upside and another bear trap island reversal back at the turn of the year. So this is looking like a situation where the bears are rather on the run. NextPlatform is next, if that isn't too much of a pun. Here you can see that we've had a decent breakout for the shares through the 200-day moving average, around $1.95. Above that, we're looking for the top of that rising trend channel from September, as high as $3.50. And perhaps we could see that by the end of this month, end of next month rather, while we hold above the $2 area and the 200-day moving average. Just three stocks to go now. First is one that's been a frequent fly here, Riot Platforms. Beautiful unfilled gap to the upside, bear trap gap to the upside back in the middle of last month. Current situation is that we're looking for the shares to hit the top of the broadening triangle from last year. That's currently pointing to a $14 target, and we're looking for that to be hit as soon as the end of this month. 50 and 200-day moving averages both rising. So while we're above the $9 area, certainly looking for the $14 mark over the near term. The second last stock here is Tilray, and here you can see that the shares have managed to break out of a falling wedge which has been in place since the start of the year. The big break really coming on yesterday's session. The level in question around $2.60. Above that, we're looking for really a retest of February resistance towards $3.50, and maybe we could see that by the end of next month. Best case scenario up to $4 by the end of next month if we take off successfully. Finishing off with another big riser of late, TG Therapeutics, and one that looks very encouraging, rising 50 and 200-day moving averages, gap through the 50-day line. Initial target here up to the top of last year's trend channel at $22.50. Best case scenario up to as high as $27 by the end of next month, while we hold above the recent swing low around $16. But ideally we stay above the recent peak which was around the $17.50 level. So that might be the best stop at the moment. That's it from me today. More updates tomorrow.